All right, so pretty much what we were covering on Tuesday, right, was the essentially measuring a solidified high, right, as a potential liquidity grab to the downside based on, right, obviously a previous high here, which was obviously after taking liquidity. So the only issue now, right, because I believe during the call we were around here, I believe around here, and it was going to be very decisive whether we were going to react from a continuation of order flow, right, which is the POI that we mentioned, the POI that we stated, because this could also be referenced as a bias invalidation, right? I know we also pointed out this POI here, but because I said that this would be taking out previous structure and you would need, you would need a transition in order, right, to play based on this POI. That would be the only reasonable way to approach this and consider a bearish bias, right? But you also have to acknowledge, right, that because our POI was then taken after Zoom on Tuesday, this pretty much taking this previous high is now correlating to be a, let me delete this, to be a bullish liquidity grab, right? And that bullish liquidity grab is now essentially, right, although it is considered counter trend because we have a high-low retracement, right? We know, you guys know that we do not trade complex pullbacks, meaning that inside of the trading range, this would be no matter bearish, no matter what. We don't trade that. We trade transitions, we trade order flow, and we trade internal structure points as well. So as you can see, the internal liquidity grab is now pretty much countering, you know, the bearish continuation. And the bullish liquidity grab here also solidifies this low. So it's also, you know, a type of unwillingness. I don't want to fully consider it unwillingness until this high is broken. These highs are broken, right? But in theory, it is considered unwillingness. And in effect, right, you can see that we came back into our inefficiency. Let's see. Came back into, right, a bullish inefficiency. And as you can see, we had an internal liquidity grab. And if you even wanted to trade based on the M15, right, we perfectly topped our M15 50% based on internal liquidity grab, right, which this internal liquidity grab is now in alignment with low to high liquidity grab, right? So it's a bit hard now to justify a bearish scenario when you have a bullish liquidity grab and an internal bullish liquidity grab following in that next day. So in reality, if you're taking any type of position here, no matter what, right, it would, until that high is broken, I really cannot justify a break-even position. But as you can see, this sequence, right, has now caused the lead up into, right, the second POI that we had mentioned, but it's hard to justify this POI after we had already solidified a high prior to meeting the POI, because we have now solidified this high and we solidified unwillingness, making this the cause, and the effect being, you know, not only taking out the POI but taking out previous highs, because it solidifies the unwillingness that was initially beginning to be printed here. So as you can see, inside of the POI, there is absolutely nothing that it was appealing in terms of even breaking scalp structure. Let's see here. So diving into the POI, right, you see high, low, high, low, high, low, high, low, liquidity grab, followed by, or continuation BOS, either one is the same, or not the same, but either one is correct, which leads into structural disruption, right? Structural disruption, right? If you zoom out, especially because it's on such a smaller time frame, this is now referenced as a turbulence point. Why? Because we had a conversion, an attempt at conversion based on the bearish liquidity grab that I pointed out, and that then led to a reversal in the opposite direction, not only taking out structure, solidifying lows here and down here, depending on whatever structural level you're referencing. So this turbulence point created the high that took structure. Therefore, it only makes sense for price to continue in terms of order flow back into the turbulence point, aka previous structural disruption. And that, as you can see, is the result, right, or the cause that resulted in today's bullish move. So although the bias up until Tuesday, right, was bearish, right, it's until the move that happened after our zoom on Tuesday, right, the bullish liquidity grab, that we can try to dictate any type of bullish scenario. Until then, it's hard to justify any type of bullish scenario, right? Which is why you guys always see me only point out intraday. Well, for the most part, I only like to reference intraday POIs, just because it's not about what POI you're referencing, it's about how price is approaching it, when price approaches it, and if it failed before you obviously hit a POI and then, you know, inevitably it comes back, it's harder to justify this, just from a rational perspective, a common sense perspective. But seeing that in EU, right, we referenced I'm pretty sure we were here during the zoom, and we had acknowledged, right, the bullish SC, the bearish SC here, which pretty much gave us a reaction to the downside. And until this gave us, you know, that bearish reaction, right, that not only led to a bearish break of structure, that's annoying, right, a bearish break of structure there, right, that is pretty much what dictated, you know, the reversal here, because we have a bullish break of structure on bullish structural disruption, right, continuation BOS, leading into a bullish move, right? And then not only that, but we came back. Oh, we actually didn't come back there, but we tried to react here, right? We tried to react, right? There is a I believe there's a bearish mitigation here, unless I'm mistaken. Yeah, bearish mitigation, internal disruption, right? Continuation BOS to the upside, followed by a reversal into the downside, making this once again structural disruption. Structural disruption changes the narrative now to the downside, and as you can see, that is the cause, right, which inevitably caused this high to create a new low, solidifying the new trading range here. Now, as you can see, there's a premium. And that has now pretty much led to our bearish movement, just because of the catalyst that happened here, right? Although it was very distinct in terms of the structural disruption right here, and then the structural disruption on DXY, right? Keep in mind, DXY dictates EU, not the other way around. So in terms of even wanting to play a position based on that narrative at play, you could see here, right, that inside of even the turbulence point, you already had the continuation BOS during London session, the structural disruption, leading this to be bullish. So it's hard for me to justify a bearish scenario unless, right, I get a bearish transition. So from here, low to high, low to high, obviously this would be one leg internally. And it's until then that you see the bearish break of structure. The bearish break of structure is now in alignment, right, with the new potential structural range, right? And you're potentially seeing a liquidity grab of the liquidity right above the turbulence point, right? But I can only dictate that until we see the continuation BOS, right? And as you can see, there was a bearish mitigation, right, based on M5 inefficiency, right at the beginning of New York session on Wednesday, right? And that is now dictated our move to the downside. AU, I believe AU was the one we mentioned that actually still looked fully bearish in comparison to EU and GU, because they did want bullish transitions. But as you can see, I believe we were here. Yeah, we were here on Tuesday. And I forgot exactly what we mentioned, but pretty much, right, as soon as we are on the call, right, we see the bearish mitigation, right, continuation BOS, leading to a continuation BOS in opposite direction, structural disruption, a variant of that. And as you can see, we now have a bearish structural range. And that bearish structural range, right, obviously continues internally. High, low, high, low, high, low, right? There's a continuation BOS here, solidifying this range, right? And you can even see a random candle here. Random candle causes a disruption in price, meaning there's probably an SC inside of there, or any type of POI per se. I haven't actually looked at this. I didn't trade this, as this was in Asia session, right? But excuse me, the bearish mitigation here, even as you can see, it reached, oh, it didn't even reach that, but that's okay. But either way, the POI had then pretty much given us a premium, which led to a continuation, right? And I believe during London today, we see the wick of interest. I believe somebody pointed that out, unless I'm mistaken. Believe somebody pointed that out. I think I was reading this morning. I believe I saw somebody say something about that. But either way, as you can see, even though the Asia move gave us a new structural range, this, based on my times of trading, are very tough to trade that. So as you can see, there is a bearish mitigation, and there was a recovery. Whoever is that, can you please mute your mic? Thank you. As you can see, right, there is now an internal reaction based on the London move. Internal reaction meaning we take preliminary structure and we take the full leg. We take the full leg. And as you can see, right, the only POIs that make sense are 1 and 2. Right, but remember what we reference, and that is to buy higher and sell lower. I mean, buy higher, I'm sorry. Buy lower and sell higher. I can't believe I just said that. And as you can see, essentially the deeper retracement, right, that even follows order flow based on that wick there. You can see this is a justified position. If you're continuing order flow based on 1 mitigation, 2 mitigation, right, that will pretty much give you that full move there with TP1 or TP2 here, based on an intraday perspective. But as you can see, this has pretty much given us the same scenario back and forth, right? High, low retracement, high, low retracement, high, low retracement. So very structured, and we are actually approaching a previous turbulence point that we referenced back in August. So I really want to see what happens as we're starting to come into this relative area of interest. But either way, bearish until, you know, we get any type of transition, structural disruption to the opposite direction, at least from a minor intraday perspective, just so we could see any type of transition that would make sense in terms of major intraday swing. But until then, this is still fully bearish. As long as, I mean, just as we referenced our mitigation on Tuesday, that has pretty much given us the continuation and the continuation. GU, this one was a bit sloppy. But I remember that I referenced, right, I was bearish based on, I think I was bearish from here, and I unfortunately broke even right after New York session, and that, you know, eventually melted afterwards, because that was unfortunately a bearish mitigation, I'm sorry. But I remember we referenced, right, that this was an internal liquidity grab, and that the only way for this to work out, this move here, is if we had, you know, a structural disruption here, because based on the continuation BOS and taking out liquidity, we have a bearish liquidity grab. Therefore, you would need a transition here in order, in order to even justify any type of bullish move. And as you can see, I was right with the bearish liquidity grab, and that inevitably broke price through our final POI, breaking, you know, essentially even that full leg, because this is another solidified low here. And as you can see, we came back. Right, I'm circling this whole thing, or squaring this whole thing, because there's a wick of interest, and then there's the invalidation at the high. And as you can see, that was met, and that was pretty much where I took my initial sell position. But unfortunately, I shouldn't have moved my stop, just because, right, the leg is here and the leg hadn't broken yet. So that's just my mistake there. I shouldn't have moved my stop, and if I didn't move my stop, this would have worked out in the end. So that's why I've pretty much been using, you know, my full scalp minor intraday leg here to give me, you know, that, you know, area where I should break even, because at the end of the day, I'm going to be right or I'm going to be wrong, right? So if I'm going to be wrong, right, no matter what, the entire scenario has to be unjustified by breaking the invalidation, or the invalidation being there, or I'm sorry, here. But you guys get what I mean. I should be waiting for the scalp leg to fully be taken out in order for me to justify, you know, any type of full bearish scenario. And internally, yeah, even internally, let me delete all these drawings. Right, I was actually observing this mitigation here. Right, for a second I was about to start closing this, but I don't like closing positions early anymore, especially because transitions can occur just as easily as counter transitions can occur. Like, just as you see bullish order flow come here into play, right? You remember, I believe we were talking on in the Discord, right, where some people were in buys and I was still in the sells, right? It's just as easily as we converted here to bullish order flow, just as easily as we will convert once again from low, high, break of structure, right, without even meeting the newly formed invalidation. So that's why I can't justify, you know, almost any reason anymore to want to close a position early. If anything, I could just justify a hedge position. But those are two very distinct things. And as you can see, the invalidation of the bias, right, post POI mitigation was not met. So realistically, my stop loss shouldn't have been here. It should have been here plus spread. Right, so just my mistake that you guys could obviously learn from. But then as you can see, we have structural disruption, solidifies the leg, strong momentum, low momentum, right? And there's even a bearish transition here with the bias invalidation being at the high. That was never met, and as you can see, that's causing the continuation today. Very straightforward. Very straightforward. I'm trying to see, I didn't look at GU today. I don't know if there was a entry today. right? But the only way that I could have justified, right, any type of position, sell position. Okay, here it is. This would have been where I would have been able to reference this POI, right? And the only reason why this is justified is look at, right, we have one push to the upside, a push to the downside. This is not mitigating anything. If anything, it takes liquidity of this and this. So there is no mitigation here. You could even see that there is an internal micro reaction based on the inefficiency here. And that then gave us a reaction, then an internal disruption, right? And then that then created a pullback, right? Which didn't make much sense. Doesn't make sense from the perspective of mitigation. And even here, right, where we aren't mitigating anything. So I don't see order flow pushing this move to the upside. So what other thing could be pushing price? Well, the attraction of a bearish mitigation area or a POI. And that is also justified via, right, although this wasn't a full break of structure, this is an extremely deep retracement, right? So you could have justified this very, very closely to even a potential liquidity grab, and you could have been conservative with the stop, right? Because the M5 POI was already 3.7, so you could have even made that about a 5 pip stop, which is 100% okay, because that then led to right 60 pips, right? Already 1 to 12, and it's currently at 50 pips, 1 to 10. But yeah, as you guys can see, very straightforward. But other than that, I mean, I don't really have much else to cover. There was something I noticed in the Discord. In the hold on, I don't want you to see this. I did notice something on the website. And it was on the webinars. When you scroll all the way to the bottom, it would stop here. It would stop at November 14th, 2020. So we had to, add something else. And now where there's a next button, if you scroll all the way down again, now you can see pretty much the second page under phase 8, which is November 14th, now 11th, right? And we now only have them until October 3rd of last year. So there was some that aren't here anymore, so I'm probably just gonna post those on YouTube. Those are over a year old. But yeah, I didn't notice this until probably a couple days ago. So I noticed that after 100, because as you can see in phase 8, there is this phase 8, you can only have 100 slots before you have to create a new page, but this next button wasn't there. So we added this next button, and now we have access to the remainders. But the leftovers that aren't here anymore, they'll probably I'll just put them on YouTube. But yeah, that's how I know you guys aren't watching old Zooms, but that's okay. Do you guys have any questions, concerns, comments? Let's see. EU today, I'm pretty sure I covered that, bro. I talked about EU in terms of the continuation. I talked about this. Right, I didn't talk about this. I don't see anything to talk about here, though. Unfortunately, right, this met POI. Right, no internal reaction unless you hop in a seconds time frame. But realistically, even me, the only way I would have entered this is here. That's the only way I would have entered. Why? Because there's a reaction here, bearish mitigation, internal disruption, into a premium, that's the only way I could have justified a bearish position today. But yeah, there was absolutely no type of retracement today, which is fine. It happens. And if there's no retracement, that's cool, because I'd rather do that than try to guess the POI. Just from a win rate perspective. I know some people are in it though. I know someone is in that. Well, you gotta look at it like, I look at it like this. You're trying to reference that as this, which is considered a premium, borderline premium. But the way that I see it is there's a bullish mitigation, bullish reaction, and then it fails. Therefore, this is my preliminary leg, and this is my full leg, because this full leg is what took out structure. So from a preliminary leg standpoint, that is a premium. Yeah, that's the only way I could have played that today. The only way. And it's okay to miss them. I'd rather leave money on the table than lose it. Right, some people would rather take every opportunity they can, but let's just say I'm a bit more risk averse per se. Where is it? Yeah, see, this is what I was saying. Oh no, that's not, wrong trade, sorry. I don't see it. Yeah, I don't see it. Oh, in the, oh, sorry. Let's see. Simple. Same thing here. You didn't note it. You didn't note the mitigation that I referenced, so you already don't even know what preliminary leg you're. Where is your preliminary leg, or where is your leg that you're referencing? That's what I'm trying to understand. Because you didn't know the mitigation, so the only way that I see this as you're seeing this as your high and this as your low. Therefore, your equilibrium, that means you're selling a discount. And remember, sell higher, buy lower. Yeah. You see, you have to be picky with whatever it is that you want to trade. For example, I don't trade discounts at all for the most part. I don't like to. It's hard for me to justify. Just because I don't want, a bearish leg, right, to finally have, this. I don't want to trade this. I don't want to trade that. Because at the end of the day, we have internal bullish structure, and we could easily convert once again. And now we could be seeing a bearish move. And as you can see now, we have taken liquidity, and now a continuation BOS, even reversal BOS. These are the types of trades that I want to take. Does that make sense? Because I don't want to try to catch a transition too early. I'd rather have sell higher, right? So I can not only have liquidity being taken out, but I have full trend in my way. I have premium in support, right? So it's just a patience thing, a patience thing and an understanding thing, being aware. So you weren't aware of the mitigation. You weren't aware of the internal disruption. So you're already at a disadvantage there. Yeah, you see, so I can't, you know, I can't fix that for you. Let's see, you caught this on AU. Nice. Nice. Yeah. So I'm assuming this is a limit. Yeah, I'm assuming this is a limit. I believe this is M15 SC, was it? Unless I'm mistaken. Oh, okay. Yeah. So you see, same principle here as DXY. You can see that there is interruptions in price. Interruptions in price then lead to a release, cause, effect. So from an inefficiency perspective, right, there's inefficiency all here. And from an SC perspective, right, you have the turbulence point that we just referenced, and we have the POI. So realistically, if your POI is taken out, then realistically this would moon. But yeah, that's a good trade. Good trade. Oh, okay. No, this is an inefficiency fill, not an SC. SC would have been here. Yeah, that's not an SC, bro. Yeah, SC would have been this, because that took liquidity, and this is the open of the candle there. So this, actually, I don't even know if that, let's see. Did that tap? This wouldn't have been a type of POI I like to trade though, but as you can see, perfect SC would be inside of the wick. Oops. Does that make sense? Cool, cool. But yeah, does anybody have any more questions? Yeah, continuations. I mean, that's where your winners, most of your winners should originate from. Remember 80-20? 80-20. Continuations, reversals. But yeah, does anybody have any more questions? I think it's better for me to do, like, for example, I've only done what, one live Zoom in 2 weeks. You see, like, now you guys actually have some type of questions to ask, and even then it's only what, like 3-4 questions. You see what I mean? So it's a lot easier on me to just pre-record them and do a live Zoom every once in a while. That way these could even be potentially longer, especially because they're on Fridays. And I get to be a lot more organized. Wait, what? Say that again? Do I ever pull risk off? I don't pull risk until I'm able to move my stop. But you can pull, you don't have to pull risk by taking partials. You can pull risk by moving your SL a bit, and I think that's what you mean. And yeah, you see, so realistically in that trade, I pointed that out, bro. My SL shouldn't have been break even. My SL should have been invalidation plus spread. I pointed that out. Let's see. But yeah, I think keeping it like this would be so much better. Like, you see, you guys are actually asking me questions, whereas some Zooms I'm saying, are there any questions? Are there any questions? No. So then, you know, what's the point of having it live? That's just what I asked myself. So I think it's better to keep the schedule like this. This is interesting though, right here. Right, the two mitigation model here. Two SC mitigation model, sorry. One more question for me? Yes, sir. Whatever. You have to show me a chart, bro. I can't go off of reading, bro. I'm a visual guy. You have to show me a chart. If in order for us to be on the same page. You have to show me a chart. You know I don't answer stuff like that. Let's see. You just said, wait, what? Then send it, bro. I'm kind of waiting for you. The fib. Where? Wait, are you talking about what I just showed? Are you talking about what I just showed? What do you, I'm confused at what you're asking. Let's see. I never said this is a premium. Never said. So this is not I never said this is a premium. But you have to also acknowledge, look at this, right? You will not always get a premium because eventually it will fail. If you notice, a lot of times you get a premium once, a premium twice, and then you get a continuation. This shows to me healthy order flow. Does that make sense? Because if you continuously get something like this, eventually it will fail because as you can see it's a bit corrective. If you zoom out. But yeah, it's more of an intuitive thing. Oh, I should have done that. I should have done that. Cool. But yeah, are we good? Do you guys have any more questions? Cool. Does anybody have any more questions? You see, like, just perfect example here is, for example, right, we were bullish here until this bearish transition, premium, right, and then internally premium, and then as you can see, the full leg now, continuation. You won't always get that deep retracement to then come down. I don't think that's realistic. I don't see that happen very often. Same thing here. This isn't a premium. Not a premium. But yeah, this one I'm pretty sad about this week. I knew I was right directionally, but yeah, just one simple mistake. But yeah, with that being said, I'll probably end the Zoom here, unless you guys have any more questions. Cool. Yeah, I'm gonna make sure to upload this right now.